Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Monday, November the 23rd. The year's 2020. Let's talk trading. Searching for or working towards. If you're here watching this video, especially if you're watching one of my videos for the first time, you were probably searching for something. You were searching for some, let's call it nugget, that would turn you into a better trader, a profitable trader, help your trading in some way, shape, or form. I mean, that's pretty much why you're on the internet looking at a trading video right now. I would imagine you're searching for something, as opposed to working towards something where you're actually doing the work. You're putting in the hours, the screen time, the analysis time. You're doing debriefings on your trades. You're really working towards becoming a better trader. And you see, most people, most traders out there think if they could just find that quote unquote holy grail, get that indicator, get that, do this method instead of that method, then that's it. They found the right method. Now, they'll be driving a Ferrari by the end of the year, right? But as we all know, that's not true. And as you should all know, these videos are for educational purposes only, and your results may differ from mine. So, is there something wrong with searching for? No, not necessarily. That's usually a first step. But what happens is once you search for and find something, is that many people in life and in trading, they give up early on. So let's say somebody's doing the rat zone. In fact, I know there was a trader out there that's been trading a rat zone. And I guess they hit their stop 2 or 3 times. Now, should they abandon it? Well, let's think about it. You try something 2 or 3 times and it doesn't work. Should you abandon it? Well, what would cause you to abandon it? Just because it didn't work? Well, we know this is the market and anything can happen. So maybe you just hit a rough patch and the market just didn't smile upon you. It took your money. Maybe there's something that you didn't do right or you did wrong. Maybe you didn't wait long enough. Maybe you rushed the entry. I think last week we talked about precise entries. Maybe you didn't take the 1 or 2 profit that you could have had and you let it go into a 5 or 10 pip stop loss. So there's many, many different things that could have happened. But, the big thing is, do you think 3 attempts is enough to determine that this method doesn't work? Now, you have to realize that the rat zone's been around for, a decade by now, I think? I'd have to go back and look. I think it's been around for a decade, and people are still using it. So obvious, just the fact that we're still using it, still being talked about, it hasn't been like, oh, this is a piece of junk, that it works for some people. And so since it works for some people, obviously you have to work towards making it work for you. Because you've already found it and you see other people are using it successfully. So you have to stop searching for a method and perhaps start searching within, what is it that I need to do to make this work for me? I mean, that's the big question. What is it that I need to do or stop doing to make this work for me? And many times it can get down to simple risk management, making sure you don't lose any more in one trade than you're willing to lose. And that might be true of just about every system out there, method. Because if the statistics are in the favor of that method, then all you have to do is manage the risk. Because when you think about it, and I've stated, we've said this before, it's the old Mike Tyson quote, you know, everybody goes into the ring with a plan. And the first time you get punched in the face, that's when that plan goes out the window. Because part of the plan wasn't getting punched in the face, right? And you can look right here at this screen here. And you know, I woke up later than normal and I was actually talking to Walmart and I missed out on this trade right here, this 80 short and break of this low right here. So actually you would have had a Walmart at 80 and you could have stacked on possibly at 78.5. What's this say here? The low was 78.5 and the rest would have been history. Harry hindsight, right? But we see this screen every day. I mean, if you had gone short here, because it opened below 90, you got short at 80. I mean, look at what would have happened. Once again, you might have made a pip. And then if you didn't and you turned around and stopped out, you go, oh, that Walmart method doesn't work. And if you had just kept at it again, you see what would have happened. I mean, you had a potential of making what? 80 or 90 pips if you held that trade that long. Chances are you wouldn't hold that trade that long because you'd probably be looking at an M1 or M5 and get wiggled out on a pullback. And then had you stayed in the trade, and then here's another one you could have stacked on once again and, really picked up some pips here. So, are you willing to, take that hard look in the mirror and figure out what you need to do to make a method, not just one of mine, but any method, work for you? Are you willing to figure out what you need to do and what you need to stop doing to make that method work for you? Oh, look, we have the top of the hour. It's real simple. You go long at the green line, you go short at the red line. You trade with the candle color. Now, will you do it? And if it makes you a profit, great. If you hit your stop, well, that's great too. You're doing the method. You have to realize that not every trade's going to be a winner. Hard pill to swallow for most traders. Really tough pill to swallow. Really tough pill. You want to win every trade. You don't. I hate losing. And here we go. We're right near that double O. There we go. We got the double O. And that was on the buy. You see the bid didn't quite hit that double O. So you can see here the ask did, but these are bid candles, not ask candles. In fact, I wrote, was it this year? I think I wrote the TRO ask candles. So, but it only plots in real time where it'll show you where the ask went. Here we go. It's like, do you take this trade or not? There it is on the bid, double O. Oh, so if you took it off the ask, you actually had a chance for, I think I saw a pip or so there. Now you see it's pulling back. That was the first touch. Walmall doesn't like the first touch. He likes second touch. So you see, he figured out something. He searched within himself. He goes, I get my fingers burned if I take that first touch, but usually there's a second or third touch. And so maybe if I get in there, I'll have a better chance of making a profit. So traders, you really have to think about this. Are you searching for, or are you working towards? Because see, the working towards, that's really that's the essence of trading. You have to work towards being a profitable trader. You can't search for it. I mean, back in the stock trading days, you want to do the stock du jour, stock of the day, which stock's moving hot, and you try and be like a butterfly or a bee flitting from flower to flower, stock to stock, in search of that honey, right? Or in search of that nectar, rather. Um, the honey's back at the hive. The flowers have the nectar. So you can see right here what happened. We had a high of 01. You had a chance for one lousy pip. Now it's turned against you. And that's trading. Nothing's guaranteed here. So it's that hard work that you have to do to figure out what you need to do and what you need to stop doing so you can make any method work for you. Because, as I've stated probably ad nauseum, once you get in a trade, the reason you got in a trade doesn't matter anymore. You're in the trade. Now you got to work the trade. You have to decide to set your stop loss. You have to do it. And if you get stopped out, you get stopped out. You have to decide whether or not you want to set a take profit, or you want to sit there and take whatever profit the market gives you at the time. So maybe you entered this trade, say, with a 5 pip take profit, 5 pips take stop loss, and you had a chance to take a pip. Do you take it? Probably most of you wouldn't. Probably most of you wouldn't. Because it's only a pip. But, if you're trading at a level where it's, say, 50 bucks a pip, 100 bucks a pip, might change your mindset a little bit different, because it could be the difference between making 50 and losing 250 or 500, so that has a tendency to change. And right here, now we're at the other end of the spectrum. Did you short at 90? Well, there you go. As you can see right here, you'd be up a pip and a half. If you took that short, now even more. But who knows? Somebody might have said, well, wait a minute, it's already run this many pips. It's not going to run anymore. You don't know that. And you see, if you took this short, you'd be up 12 pips, 11 pips. Boom, just like that. So if you had stopped out here and then turned around and did there, you took your signal, you'd be back in profit. And that's a key. You got to take the signals. If you pick and choose the signals, then you might be picking the wrong signals at the wrong time, and you're not letting statistics work in your favor. And so you saw this live in real time, what you could do with this. So fellow traders, once again, are you searching for, or are you working towards? Because it's not what you trade, it's how you trade it. So go out there and drain the banks. And if you're new here, welcome aboard. Click subscribe, click like, share the video all over the internet, and click the bell so you know when I make new videos. This is the Rumpled One, over and out.